All right, so we just wrapped up the refinance at that Lang duplex that we built here in Alvin, Texas. I've always getting asked about how we do financing and stuff like that. So we brought in the financing master. This is Andrew with Renovo. He's handling the refinance. I'll let him deal with all the specifics and stuff like that. You guys also asked a bunch of questions about the financing side. Typically, me and Chase will fund a lot of stuff ourselves, but with how easy they've made the new construction ground up, process, we're going to be doing a lot more loans with them, not just on the refinance side, but also on the new construction side. So I'll let Chase introduce Andrew today, and then we'll go from there.
So I met Andrew a few years ago, and he actually refinanced a big commercial property for me. It was 5 duplexes, 10 total units. It was a little under $1 million. That was one of the very first loans we ever did, and I just kind of ripped it right off the front. It wasn't some $250,000 little note. I called him and I was like, "Hey, I need $1 million," and true to form, he was really accommodating. It was rocky because we were getting to know each other. Not the loan process itself, but just kind of figuring out the commercial aspect of everything. Mm-hmm. And then when we jumped into the residential lending from them, man, it was off to the races. I mean, that was one of the easiest, most accessible loans that you can get on a fix and flip or a fix and hold. And now we've started to do new construction. And I know you and I have talked about growing the new construction portfolio from my side, and that's kind of his goal. I know he'll talk about that here in a second. But the new construction loans, guys, are the easiest I think I've ever done in the history of loaning. They're fantastic. Their rates are great. The draw process is super simple. So we invited him out here today. And true to form, he came and he's wearing an Astros shirt, so we'll give him points for that too. I'll kick it over to Andrew from Renovo. So there you go.
Andrew with Renovo Financial here in Houston. I live in Sugar Land. Been born and raised here. It's my backyard. Been with Renovo almost 6 years. We do, we sort of, do the short-term loans and long-term loans. So the short-term loans would be the fix and flip, new construction, typically 12 to 18 months. And then the back end is the 30-year DSCR loans. And we do those, 1 to 4, and then also the 5 plus units. We can go over, kind of, brief specifics on each loan if you like, or with the best, how you
can wrap it out, man. Whatever you want, whatever you feel like. What do you guys makes you stand out versus any other lender that they want to go with? I mean, I can speak for myself. You guys just started doing my DSCR loans as well, and let me tell you, I mean,
they're easy, aren't they?
I mean, dude, I think the one was 2 weeks. Was it 2 weeks or 2.5?
I mean, it was.
I think it was 2 weeks. That's from start to finish. Like the time we went out the disclosures out to the time that I was at the title company closing, it was 2 weeks.
That was the first one you did with.
No, that was the first one.
Know who you were.
I think we have like 5 now, or 3 or 4, or whatever it is. But like by far, like another lender jacked it up. I sent it to them, but they were still trying to work the file after I already told them, hey, I gave it to somebody else, and we were already closing. That's how bad they were with response. And I do a lot of loans, and like that's how bad they were. And he was already like, yeah, we're already ready to go, dude. So at that point, I was like, I'm not doing anybody else's loans besides you.
The nice thing about today is we are sitting in Capital Title in League City, and shout out to them because Kelly is absolutely the best title company on the planet as far as I'm concerned. They are very investor friendly, very investor friendly. They work with everybody in their timelines. They're very communicative. But today, with Renovo, we're doing our Lang refinance. They hold the note on a 321 DSCR. We just got back a little money. A little bit. You want to share how much? How much?
I'll let you take that part.
It's $206,000 we got back from that. And they're giving it to us in cash. He's got it in a suitcase. It's a wire transfer, just like any other legitimate transaction. But we're getting a couple $100,000 back.
Yeah.
Right? And how long did that process take? How long did it start to finish?
So the speed, it was probably maybe 3 weeks, maybe. I mean, the speed, honestly, the speed it is I can sit here and brag if you want me to,
yes.
But it's a
Peacock,
testament,
dude.
but it's also a testament to the borrowers, so we can sometimes, we can get the file kicked off, we can order the appraisal, we can give you the doc list, we can get everything moving, but at a certain point, we can also only move as quickly as the borrower will allow us to, so some borrowers are very, very good, like you guys, of getting us stuff to keep the file moving and moving along. Some borrowers, they just, don't necessarily need to close super quick, so it might drag out to like 3 or 4 weeks, maybe, possibly. But, in on all of the loans that we do, we have our own appraiser, which, if you were to say like, what are some of the high level benefits of Renovo, I think being local is great. I really, really know the Houston market, in the surrounding areas. We have our own appraiser who deeply cares about, I don't want to say like getting the value, but just like deeply cares about communicating, like what are, showing comps and talking, but who's also fast. There's not a third party in between that takes forever. And so like getting the appraisals is a big part of the speed of getting it closed, because we can generally get them back in less than a week.
Yeah.
It's the same appraisal for the BPOs as well, right?
It's not the same appraiser, but it's the same process where we go to like, we have a very special relationship with Melanie,
Yeah.
our DSCR appraiser. But we also, if you brought us, or like, the 5+, the county road one.
Yeah.
Like we have a very special relationship with Ambrose, so like the BPO is different. It's a guy named Derek. And so like I was talking to Derek earlier today, so if we need anything, we go directly to these guys or these people who know our process, who know how to write our reports, our requirements. And it's always a quick turnaround.
Well, I think that's big because it always gives the people confidence, because that's the one thing, even when I mentor people, they're like, hey, well, what is the ARV going to be? It's like, well, if you really want the opinion of a professional, it's like you should get a BPO.
Yeah.
It's good because I know how to find ARV, you know how to find ARV, but it's like if I'm touching somebody in another market, I get that question all the time. It's like, well, how did you know it was going to be 530 or 540, whatever it was? It's like, well, you could get a BPO, and that would be the best way to do it, to actually determine the ARV of it. And that's something that I get asked all the time. So you guys have that in-house to be like, yeah, this is what it's going to be worth.
A lot of that is experience too. So we know the Alvin market, and we know the 7021 in Houston. We know the 7087, and we know the 7033 because we've got so many doors in those areas, and that comes with experience.
Yeah.
And I'll plug a little bit for us. That's the reason, if you're thinking about investing, you may want to reach out, because we know certain markets where we can plug your money in, and it's a plug and play really from start to finish. We've got the bank, we've got the appraisers, we've got the construction.
I know people ask, they're like, we know because we have another appraisal from 2 months ago.
Well,
Just saying the same thing.
We have
Yeah.
an appraisal that was 2 blocks away that we're counting as the legitimate appraisal.
We don't need comps. We literally have
We have
that.
the comp. We own the comp.
Yeah.
And that's what makes it nice, especially with places like Alvin and 7087, 7021, and some of those other areas. But yeah, as far as Renovo goes, man, I agree with Andrew. The appraisal process is so user friendly. You get to speak with the appraiser and get their thoughts beforehand, and that's really an advantage as well, because before they even go out to the property, you get to kind of discuss with what they think and what your concerns are, and then they take those into account, and that makes it really, really valuable. So I will say, and then the speed with which Renovo goes.
Well, yeah, and then you always work with me and my team, because like I'll sometimes hear if borrowers use a different lender, or how it works. I'm kind of just curious. And it's always like, well, I deal with a new person every single time, or I call in and I don't
No,
know
that's
who I'm
exactly
dealing
how
with.
it goes. Like you get funded by, or you get farmed in by the loan officer, and then all of a sudden now you're off to a transaction coordinator, and you never speak to said person ever again.
Yeah.
So I'll attest to that. You are on every single
I
email
have
thread.
3 people on my team,
And they are awesome,
who work
dude.
every single
Awesome.
loan. And that's actually why I want to get a picture with Angela, because I really, more than anything, I wanted to take a picture and send it to Lauren.
So she knows
I'm
she's
like,
real.
because my team knows the borrower, very, very well, and like you get to know them, and that's not common.
Yeah.
I would say, that's all that stuff sounds good, and it is good. I would say, and I've said this over the years, and our internal sales calls, and I hear other people saying it too. It's like, I'm in sales basically, so it's always sales driven, and how many loans are you closing, and all that stuff, and we kind of get judged. And maybe you want to edit this out, but this is just the God's honest truth. It's like maybe, we all kind of how many loans are you closing? How much did you do this year and this month and all that stuff? And it's all that's important. But I always I never really look at it like that. I'm like, this may be one of 15 or 20 loans that I close in the month, but this one loan is the most important thing that's probably going on in this borrower's life at the time.
Right now.
So don't fucking think past it, or don't think, oh, this is just another one of my many loans that I need to do, and this is only,
it's just another day.
It's just another day. It's
Yeah.
this.
I
I
get that
agree.
feeling from it.
Yeah, no,
So
you guys generally care.
So
that's true.
Yeah, and so that's what
That's true.
it's you can try to never forget of how important this is for whoever the borrower is, like this loan is very important to hit the LTV that they want, or get the rate that they want, or get the cash out, or like it's super fucking important, you know. So like, and I don't have ultimate control. Like I can't make loans, decisions on the behalf of the loan committee, but I know what they're going to look at. I know the questions they're going to ask. So like I know up front, like, hey, let's either have the conversations, like how can we get there to where we can ultimately get a yes on the loan that you want to get. So
there's two main things that I want to hit on, and maybe we could wrap it up or go a different direction. But for me, Renovo does two really good things. One, they service their own portfolio in-house. They do not package and send off. Okay, so if you're a buy and hold guy or a girl, you know that trying to call and get payoffs or insurance information from
taxes and
from the bank or the lender that did your loan and then farmed it out and packaged it and send it is extremely difficult. I don't have to do that. I can call Andrew and he can put me in touch with the actual person in their office that can give me that information on all the facets of my deal after it's been originated. And for us, as a buy and hold,
that's what sold me.
It's incredibly advantageous.
I didn't care if the rates were going to be higher. I was still going to go with them. I didn't tell him that because I wanted a good rate, but I was like, but I was going that way anyways.
You don't know how valuable it is until you're trying to get on the phone and get an insurance question answered from somebody.
Or they're going to, hey, you're going to get lender place coverage because they say you don't have insurance, but I have insurance, and
it's so important.
It's infuriating.
And the second thing is that as a borrower, your needs will change month in and month out sometimes, maybe day by day. And Andrew, to his infinite credit, has called and taken my calls and strategized with me on every. I don't think there's been a loan that we've done where we haven't strategized what kind of DSCR, what's the rate, what's the payment, where's the insurance, and all of those different details down to the smallest detail to accomplish the goal that I want. Because goals change.
Yeah.
Is this a sell? Is this a
refi?
Yeah. Is it a refi? What is it? What are we doing? And he'll go over, is it a 3-2-1? Is it a 5-4-3-2-1? Is it a 3-0-0? What's the rate? What's the term? And all of these different things. They do bridge loans. They do new construction loans. He's got all these types of things that he can bring to bear, which makes it so valuable in your long-term goal. Because your goal may change.
Yeah.
This quarter we may have
we already changed it.
We already changed it.
All right, so that's true. Like I said, we're going to get to you guys' questions that everybody's always been asking about financing stuff. So since we got the man in-house, we're going to go through some questions that y'all asked in the comments. So if you guys do have other questions, please hit us up in the comments. We'll be more than happy to try to get them answered for you. So first one we got, if someone owns the land, how much would they need to bring to the closing table, or how would funding like that work if they already own the land?
All right, so that's a good question. So there's more than anything so if you own the lot, and you bring it to us, it would obviously be considered a refinance. When it's already owned, we like to see, it's not always an absolute requirement, but plans and permits in place since you have already owned it. That's generally the idea, is to own it, develop it, get it ready to be built, and then you go, find a lender when it's build ready. The best way to answer it is, I think, is we lend up to 90% of the total cost. And so it's not really of like, hey, can you always get to 75 of ARV? It's more of a LTC calculation that we run. And so it's 90% of the total cost. So that would be, if you bought the lot for 100 and the construction cost is 200, your total loan to cost is 300, we would lend 90% of that. Now there's different factors in of like, well, is this going to be and we constructed these as cash out refinances or just a cash neutral and fund the construction. So there's different ways that we can do it, and that's kind of case by case. I'd have to ask like some more detailed questions about how long have you owned it, what did you buy it for versus what it is worth now, because we give you credit for that appreciation in the meantime if you've owned it for a decent amount of time, or if you've put developed it and increased the as-is value. So those are things that we look at, but high level, the answer would be we lend 90% of the total cost, the cost being purchase plus the construction combined.
So you can add the value of the land essentially into that. So that would obviously bring the project cost down because you already own the land.
From my experience, I've done a couple of these where I've owned the land or we've owned the lots and we've done cash out refis on both the land. What I can tell you is that it usually hovers anywhere between 60 to 85% that you're going to get back on what you purchase a land for. And it's not always true. So for example, there's a one-off where we just did where our value came in on the lots that I owned a little bit less. So I took around, what was it, like 40% or right under 50% of what the land cost was at that point. That was a little bit of a one-off, but for the most part, in my experience, I know we can't really give you, everything's malleable, but from my experience in doing them, you usually will recoup 50 to 75% of your land value or your land cost if you bring it to the table. And true to form though, he does make a good point. You get most, I've never done one without a plan set, so I'm not quite sure how that works, because I'll buy the land, we'll get the plan set in place, we'll get our permits, and then we'll go to Andrew, because we don't want to be paying money and interest charges while we're getting plan sets, because that process could take months, guys. I literally just had one that it's taken 9 months to get a plan set, and we're still waiting for a plan set. So you all of a sudden you're pulling out a loan on some land that you don't have a plan set on. It may be years, and now you've got
paying interest on all
paying
that.
interest, and that blows your margins. So what we'll do is we'll buy the lot, we'll get a plan in place, get the plan set, get the permits, and then we'll go to Andrew and pull our cash out, and then we'll fund the construction in that particular case. But from my experience, it's been anywhere between 50 and 70% that I've been able to pull back from a cash out refi when I own the lot. So that's just from a real world.
Yeah, I like that we got both sides there.
Yeah.
So next one is going to be, what are the credit and liquidity requirements for construction loans, and am I required to have experience to get approved?
$1 million. All right, I'm sorry.
So the three biggest things that we look at as a lender, what I look at is credit, liquidity, and experience. Those are the three things that kind of, whatever loan we're doing, those are kind of like the three, I guess, the fundamental pieces of, like, if we have that, we can pretty much always get the loan, to work. But if you're talking DSCR, credit would be number one. Credit's the most important. Because these are 30-year loans, these are lifetime loans. So we want to see, like, hey, this borrower has a great credit. He's proven track history of, like, paying his bills on time, essentially. But if you're talking new construction or fix and flip, credit, honestly, is kind of the least important. These are 12 to 18-month loans. The most important thing is actually experience. Experience, because we don't, I don't want to say we don't have set terms across the board. If you guys bring me a loan, I've done, tons of experience, your pricing is more favorable than somebody who's maybe only done one or two.
Yeah.
We don't have like a set, hey, this is our loan, this is our new construction product. Everybody gets it, or everybody gets the same, structure. We can do a loan new construction loan if you don't have experience, but it would just require a higher down payment or the lower LTC that we were just talking about. And so we just would require more equity is basically what it is. And so if you came to me and you don't have, any experience, or you've only done maybe one, but you have good credit, you have decent liquidity or good liquidity, there's generally a path to get it done and approved, but it's just not going to be at, say, like the 90%. We're just going to require a little bit more.
That's been my experience. So what Andrew will do is he'll take a look at all three, and sometimes four of those different types of things, depending on if it's a DSCR or a new build. And he'll argue to your strengths, whether it's liquidity or the experience or the credit. Like, he'll take it to his underwriting team and he'll go, listen, this guy has experience, but the liquidity might be light or whatever, and he'll argue whatever your strengths are. I will say, another plug, if you need experience and you don't have experience but you have liquidity, or if you don't have the best credit but you've got liquidity, or if you have experience and you need some credit or some liquidity, any of those, Gabe and I are all three of those things. We've got heavy experience, we've got heavy liquidity, and we've got good credit. And so if you wanted to join us as investors and get the experience, or you need liquidity for a project that may be juicy, that you don't have the means to get off the ground, throw a comment at us and let's take a look at some of these, because we are scaling in a big way, aren't we?
We are.
So, that's a great answer.
All right, so last one for the day.
What's his favorite color?
How do your draw process work? Do you do advanced draws on construction, or do they have to do always in arrears?
Okay, yeah, so it's always in arrears. I will say, I guess I didn't touch on the liquidity part of your last question. The liquidity is, so again, it's not case by case. If you brought a lot that was a refinance that you went and, in that same example, if you went and purchased that for $100,000, and you brought a refinance, and you came for the construction loan, and it ended up being a cash out refi, you're probably going to recoup, if you use, Chase's example, $50,000, $60,000 back on the refinance, on the cash out refinance, and then we'd fund the whole construction. So your pre-close liquidity wouldn't need to be as strong because you're about to go cash out $50 or $60 or $70,000, which we factor that into the approval process. My rule, I guess my go-to answer sometimes is whatever the monthly note is. So say if it's, a $2,000 note after we close, we generally like to see about a year's worth of payments. So $24,000, and it's not always a full year, but we don't, we do have liquidity requirements. You need to show some cash in the bank, especially if it's on a new construction or bridge loan, because those are interest only payments where that asset's not generating income. Unlike a DSCR loan where you're getting, the renters to pay the note. So we do have them. It's generally around a year's worth of mortgage payments, but it also depends on, maybe you're getting cash out to where, maybe that number would only have to be 6 months or 8 months or whatever it is. But it's really case by case. It's hard to give a specific answer. On draws, so we do draws a couple different ways. It's all very simple. Again, I'm local, so I can do the draws myself if needed. But the most common and the easiest one Chase, I know you just did one, but it's basically through FaceTime. So you would, before if you haven't done it, one thing I'll always try to do, like if you're doing a brand new fix and flip or new construction loan, I always, before we close, I'll get you set up with our asset management department, which is our draws guys. And you create an account and you go in there to where whenever you're about, I basically just want to make sure that you guys, the borrowers, are ready and in the system to pull a draw by the time you're going to be ready. So like, I don't want you to say, hey, I'm ready for a draw, and then you have to go create an account and get all set up, and then it might take a couple of days. Like, I want to be proactive and get that ready. But basically, once the time you're ready to pull a draw, you just go into your account, request a draw. Our asset management department will contact you, and they basically just take over access to your camera. And so you don't even have to be on site. It could be any of your guys. It could be anybody who's there at the project with the phone, and our team will text you a link. You click on the link, and they basically just take over your camera. Like, all right, Chase, Gabe, go walk around, and and you'll say, hey, I did the framing, or I did the pour the foundation, or I did painting, or whatever it is, and then he'll be able to take pictures from his end to basically save and put it into the file, and then as soon as that's done, we send a PDF, right? A DocuSign, you sign it, and then the wire goes out. The ACH goes out.
The great thing about this interview is I've done everything he's talking about. Like, I've done the DSCRs, I've done the fix and flips, I've done the new construction and the draw process. I've used only 2 hard money lenders in my entire career as a builder, and I've used maybe 3 long-term lenders, Renovo being the only long-term lender we use now. Their build process is extremely easy to get in, and the draw process, I would say, is even easier. It's so simple. You go online, you put in the draws that you want because they're all itemized because you've already sent them a scope of work. The guy calls you on the phone, normally within that day. The last draw, I'll speak specifically to this last draw, was $47,000. Which is a decent draw because the total build amount that we have is $225. So it was literally 20% of the draw. We're gonna make 5 draws total throughout the project. I called him. He called me on Tuesday morning at 9:30 in the morning. He said, I'm here. By Tuesday, 4:30 that day, it was done and wired into the bank account. Now, I'm not saying that's a general rule of thumb and you should expect that. I'm saying that's what happened. I'm saying that's what literally happened. Yeah. Consistently, that has happened. The first draw that I made, because this has been the second one, it was within 24 hours. I made the draw at 4:30 the day of, and then the next day, it was in my account like mid-morning. So that was an incredibly fast. I've never experienced anything quite like it. It's extremely fast and extremely user-friendly. And assuming that you have all your ducks in a row and all the things that you're asking for are complete, your money's in the account. Yeah. I mean, it's done. And it's so easy to continue and keep going. Because everybody knows your draw funds the next phase of the project. Right. Yeah. And that's the easiest way to stop or slow down a deal. And we all know in this business, speed
is
kills.
everything.
Yeah,
Both
and,
ways.
and you know, from the lender standpoint, like we don't want to hold you up. You know, we want to keep you going. We know like the faster you get through it, the faster we get paid back. You know, so like we don't want to be any sort of a kink in like you not.
It wasn't at all.
Yeah. I mean, we don't.
It was actually,
like,
I had actually anticipated having to fund the account, you know, from our parent account to keep the draw process going because I figured 3 to 5 days. No, quick.
I mean,
quick.
I've heard borrowers, and this is just crazy, but like I've heard borrowers tell their experiences of like, I'm not getting my draw because the lender wants to make more interest on me. You know, like dragging it out. I'm like that's just the craziest thing I've heard. Like to even that.
To think that,
to
but it's happened.
being experienced is just like insane.
Yeah.
All right. Well, we want to thank you for coming out today.
Thanks for having me.
Guys, Andrew with Renovo Financial right here in Houston. I will say we're not making any money off of this. This is not a plug that we're getting paid for. This is just because we respect him and his time, and we want to be able to. And plus, everybody keeps bugging us who the hell we use for financing. So we wanted to plug him in there. But
Can't keep him a secret
this is
any
purely just because they have been by far the best experience. I mean, we have two very seasoned investors here, and neither of us have had any other lenders like this. So, but that's it for today, guys. Appreciate y'all stopping in.